Hi everyone, welcome back to Saheb Academy. Today in the sixth video of rectification, we are going to understand what is the impact on profit or loss because of this. Okay, so see, there are two impacts actually. The first is when the error happened, and then when you corrected that error, then what is the impact? Okay, two impacts you have to understand properly. But first, what are we going to do is we are just going to focus on the impact that is there when you correct the error. We can say after rectification, and then when error happened, that would be before rectification. Is that clear? You have two things over here: before rectification, after rectification. First, we are only going to discuss about after rectification. Fine. See, it's really simple. How you are going to understand is you just have to see the rectification entry. For example, let's say an error happened. Purchase book was undercasted. What is the rectification entry? Purchase account debit to suspense account. You all know that purchase book is undercast. You have to increase the purchase account by debiting it, and then suspense account will be credited, right? Because the error is there only in one account, and let's say the error has been detected after preparing the trial balance. Is that clear? So that is the entry for purchase book undercast. Fine. Okay, so that's the rectification entry. You have the rectification entry now. Now what you have to do is you have to see the rectification entry properly and see if it falls into first case or the second case. See here, what's the first case? If any trading and profit and loss account item, what does that mean? Trading and profit and loss account item? Simple, all the incomes and all the expenses. Okay, because those are the things that goes into trading and profit and loss account, isn't it? Yes. So if any of those items, all the incomes and all the expenses gets debited, that means profit is decreased. That means profit is decreased. And if any trading and profit and loss account item gets credited, that means profit is increased. Now what was our rectification entry in this example? Purchase account debit. Purchase account is what? It is an expense, right? Expense has been debited in that rectification entry. So that means after rectification, profit is decreased. This is the impact. First scenario. Is that clear? That's how you have to do this. Fine. Now you will ask, what is the reason and logic behind this? It's really simple. See here. How do you find out the profit? You take the incomes, all the incomes, and then you subtract the expenses which have been incurred to earn that income, right? And you get the profit. And you all know that income and profit are positively related. Whenever income increases, profit increases. Whenever income decreases, profit decreases. But expense and profit are negatively related. Whenever expense decreases, profit increases. Whenever expense increases, profit decreases. Isn't it? Yes, that's the thing. And income has credit balance, expense has debit balance. Okay, so if you want to increase the profit, then what you have to do? You have to increase the income or decrease the expense. Or you can say income has to be credited and expense also has to be credited. Yeah. If expense and income, if they get credited, then only profit will be increased. Clear? That's the thing. And if income gets debited and expense also gets debited, yeah, income is decreasing, expense is increasing, at that time only profit will decrease. Clear? So this is the logic behind this. Fine. You just have to see the rectification entry. Once you see the rectification entry, see if you have any income or expenses. If they are getting debited, profit is decreased. If they are getting credited, profit is increased. Easy. Now what about before rectification? Simple. You just have to see the impact after rectification, and then opposite to that would be the impact before rectification. See here, if impact before rectification is asked in the question, then first find out the impact after rectification. Okay, first find out the impact after rectification. Let's say you came to know that profit is decreased. You came to know profit is decreased after rectification. What about before rectification? Opposite to that, that's all. Yeah, because after and before, what are they? Opposite. Yeah, then opposite would be before rectification. Profit is decreased now after rectification, then before rectification is profit is increased. Is that clear? That's how you have to go about this. It's really simple. It's not difficult at all. Okay, let's just see a couple of examples and Let's understand this properly. Now here we have some examples. I have taken this from the second video. Okay, so see the first rectification entry over here. Rive account debit to sales account to purchase account. Do you see any trading in P&L item over here in this entry? Of course, sales and purchase account, isn't it? Yes. What's happening to them? They are getting credited. If they are getting credited, what does that mean? It means that profit is increased after rectification. What about before rectification? Profit is decreased. Opposite to this. Is that clear? Yes. By how much? By how much? 1500 plus 1500, that is 3000. Clear? Easy. Next transaction. See here. Second. See this entry. Purchase account debit, sales account debit. Trading and P&L items are getting debited. If they are getting debited, then profit is decreased after rectification. Before rectification, it is increased. Opposite to this. Is that clear? Simple. Next entry. See here. See my account debit to purchase return account to sales return account. 5000, 4000. Yes. So what is happening over here? Trading and P&L items are getting credited. Whenever they are getting credited, what does that mean? Profit is increased after rectification. Before rectification, profit is decreased. Opposite to this. Clear? Easy. Next, sales return account debit, sales account debit to Shivraj account. Here by how much? Here 9000. 5 plus 4, 9000. Now in this case, what's happening? In the fourth case, sales return account debit, sales account debit. So they are getting debited. Debited means decrease after rectification. Profit is decreased after rectification. So before would be opposite to this. That would be profit is increased. Clear? Easy. Let's move on to the homogeneous errors. Okay. So in homogeneous errors, you might be little bit confused because see what's happening in homogeneous errors. See here, what has happened over here? Purchase account debit to sales return account. Yeah, both are trading and P&L items, and both are getting equally debited and credited. 2000 debit, 2000 credit. So the impact is nil. There is no impact. Is that clear? In the second case also, purchase return account debit to sales account. This is also trading and P&L item. This is also trading and P&L item. Both are getting debited and credited. Purchase return is getting debited and sales account is getting credited with the same amounts, 500, 500. So, the impact is nil, isn't it? Because see, because of purchase return, what happened? Debit means what? Profit is decreased by 500, and then sales is a trading and P&L item. It's getting credited. That means profit is increased by 500. Decrease of 500, increase of 500. The net impact is zero in the profit and loss. Is that clear? Yes, that's the case with all of these transactions. Yeah, trading and P&L item, trading and P&L item. Yeah, both trading and P&L item, both same amounts. So it's nil impact. Clear? Easy. Let's move on to the wrong amount error examples. See here, I'm taking all of these from the previous videos. Okay, these are not new examples. Yes. So see here, cash paid to Isha 4000 was entered as 3500. Isha account debit to cash account. Now here, tell me, will this impact profit or loss? No, it would not. Why? Because here you do not have trading and P&L items. Yeah, you need trading and P&L items to have an impact on profit or loss. And these Isha account and cash account, they are not trading and P&L account item. They go to balance sheet. They don't go to P&L or trading account. Okay. Yes. The next transaction, see here, electricity account debit to cash account. Now here, what is happening? See carefully. Electricity is an expense, so it is getting debited. That means profit is decreased after rectification. What about before rectification? Profit is increased. Opposite to this. Is that clear? Easy. And then here, bank account to drawings, no impact because these are not trading and P&L items. Next transaction, Nikhil to cash, no impact. Sale account to Alfred, there is an impact because sale is what? Trading and P&L item. Yeah, trading item. So sale account is getting debited. What does that mean? If it is getting debited, that means profit is decreased after rectification, and before it would be opposite, that is profit is increased. Okay, easy. Next, insurance premium. See here, bank account debit to insurance premium. What is insurance premium? It's an expense. P&L item is getting credited, 150 credit. So whenever it is getting credited, that means profit is increased after rectification. Okay, before rectification, profit is decreased. Yeah, when the error happened. Is that clear? Easy. Fine. Now let's see casting error examples. See here, casting error examples. See here, sale account is getting credited. Credited means profit is increased after rectification. Before rectification, decreased. Clear? Easy. Next, supplier account. Will this affect our profit or loss? No. Why? Supplier account is a creditor account. It does not go into TPL. It does not go into trading or profit and loss account. Clear? Easy. Purchase account was overcast. Purchase account is credited. So what does that mean? If it is credited, that means profit is increased after rectification, and before rectification it is decreased. And then see here, sales return is getting debited. If sales return is getting debited, that means decrease. See, remember this, whenever you forget or anything and you want to immediately remember the shortcut, debited starts with D, right? And decreased also starts with D. Okay, so that way you can always remember that. Fine. So here in this case, profit is decreased after rectification and before it is increased. Then here you have, see, suspense account to purchase return. What has happened? Profit is increased after rectification and profit is decreased before rectification. Clear? Yes. And then sixth, see here, no impact. No impact because here you don't have any trading in P&L item. Next, discount received. This is a P&L item, right? So what is the impact because of this? Discount received is getting debited, profit is decreased after rectification and before it is increased. Next, suspense account to bank, no trading in P&L item, so it will not impact anything on the profit. Here also the same case, no trading in P&L item. And then at last you have a P&L item, that is discount allowed. Now discount allowed is getting credited. Whenever any trading in P&L account item is getting credited, that means profit is increased after rectification and before it is decreased. Is that clear? So this is how you have to go about this. Fine. Shall we see some more transaction or is it enough? It's enough, right? Let's see some more over here. Okay, in the the right previous video. So here, see, in rectification entry, repairs account to building account. Repairs account is getting debited. Repairs is what? It's a P&L item. So debited means profit is decreased after rectification and before it is increased. Avinash to Akash, no impact. Harshita account to suspense, no impact because these are not trading in P&L item. Yeah. Salary account to receptionist. Salary account is a P&L item, right? So what will happen? Salary account is getting debited. That means profit is decreased after rectification and before it is increased. Clear? Shall we see some more? Okay, and then we'll end this video. Okay. See here. Furniture account debit to purchases. Purchase account is what? It's a trading account. So it is getting credited. Profit is increased after rectification and before it is decreased. Rent account to landlord. Rent account is a P&L item. It is getting debited. That means profit is decreased after rectification, and before it is increased. Fine. And then typewriter to office expenses. Of course, expenses, you can clearly understand this is what? P&L item. So it is getting credited. That means profit is increased after rectification and before it is decreased. Next you have, see, Mahesh Chand account debit to bad debts recovered. What is bad debts recovered? It's revenue, it's income. Yeah. So directly you can say it is getting credited. So what will happen? Profit is increased after rectification and before it is decreased. Is that clear? Yes. Suspense account debit to Gupta account, no impact because you don't have any trading or P&L item over here. Fine. And then see, suspense account to trade payables, no impact. Rima account to Seema, no impact. Zara to Zahir, no impact. Drawings account debit to entertainment expenses account, of course there is an impact because entertainment expense is what? It is an expense, right? It goes into P&L. So it's getting credited. That means profit is increased after rectification and before it was decreased. Then you have suspense to salary. Of course it has impact because salary is an expense account. So it's getting credited. That means the same thing. Profit is increased after rectification and before it is decreased. Next you have suspense to issue, no impact because issue goes to balance sheet. It does not go to trading or P&L. Next you have Manmohan to sales return. Sales return, what has happened to that sales return? It is getting credited. It's getting credited means that profit is increased after rectification and before it was decreased. Is that clear? So this is how you have to go about this. It's really simple. All you have to do is you just have to see the rectification entry, what has happened in it. Okay, either the items will be debited or credited, or nothing has happened. I mean, it is not trading in P&L item, so there is no impact because of that. And sometime the same thing will be debited and credited. Yeah, trading in P&L item only, getting debited as well as credited with the same amount, so no impact because of that also. All right, so that's it for this video. See you in the next video. Bye.